Well, it's time now for our wrap-up of the day's market movement. Here in Europe, UK government bonds resumed a steep sell-off today. Investors still concerned about ditched income tax rises in this month's budget. Well, global markets are also shaky due to uncertainty over economic data over in the United States. As always, we're going to turn to Jameel Ahmad, Chief Analyst at GTC Trading. Jameel, thanks very much for joining us as always. So we're seeing a sell-off then as the U.S. shutdown is coming to an end. You would I guess that's kind of counterintuitive. Why is this what we're seeing?
It's the second Friday in a row now that we've seen markets really take off in terms of actually people taking profits off the table. In terms of the government shutdown, although it's good news that actually has ended and it was the longest shutdown in history, the issue at hand is that there seems to be concerns that the economic data that was not released in October might not actually be available at all. So we might not actually know how, let's say, detrimental the shutdown has been to the economy, or whether the shutdown actually hasn't impacted the economy at all. So investors are taking profits off the table. It's not just on Wall Street and financial markets and world markets. We're also seeing it in gold, Bitcoin, the US dollar. So I think at the end of the week, traders are just taking profit. But until we get clarity on when exactly we're going to get the resuming schedule of economic releases, it's going to be a bit difficult for investors to be confident about next week as well.
Now, Jameel, investors also seem nervous about the consequences of the shutdown and the Fed delaying interest rate cuts. How is that affecting the situation?
So right now, there's a 50-50% chance of the Federal Reserve, the US Central Bank, cutting interest rates next month in December. If we would have had this interview just over a week or so ago, we had more than a 90% chance of another interest rate cut. Although the Federal Reserve, which is the US Central Bank, policymakers didn't want to, I would say, provide too much confidence they're going to cut interest rates, financial markets were quite confident they would. Until we get the key economic data start to be resumed again in terms of release, it seems that financial markets are going to be undercooking the likelihood of US Central Bank cutting interest rates. But I would say that actually the probability is higher that they're going to cut them rather than leave them unchanged, because we know how much pressure the US Central Bank has been under this year anyway in terms of leaving it too late to cut interest rates.
In other news, Jameel, gold has dropped. Bitcoin now under $100,000. What other developments in that sense have caught your eye this week and the days coming ahead?
Everything's been sold today, so I wouldn't look at anything as idiosyncratic or an isolated financial market movement. I think Bitcoin moving below 100,000 US dollars, that's a key area for traders to watch, because it does open the doors for a potential correction lower. Having said that, again, this time last week, we did see gold prices actually go below 4,000 US dollars. Again, that was a big psychological level. But just a couple of days ago, we moved back towards 4,200 US dollars. Overall, financial market volatility remains very lively. We're seeing a lot of moves across financial markets. So investor education is very important. And I think investors are also trying to gauge what exactly we might start to see towards the end of this year and 2026. But at the moment, we don't know what's happening day to day. So it's very difficult to provide a medium and longer term outlook towards what trends and themes we need to watch.
Jameel Ahmad, thank you very much, as always, for that market analysis. Well, it is